Okay, now that we've understood basically everything about the strategy, how to enter the daily bias, the power of three, I want to tell you a little bit more about how to master each one of these concepts. And we're going to start with the daily bias. So I want to give you an exercise that you are going to do that is going to extremely help you with seeing the daily bias, with seeing market structure, with seeing everything. And a lot of the people, they tell you all of these things. It's like, oh, this is how you do the daily bias. This is how you do that. But they never tell you how to actually apply it or how to learn to apply it. Because how many daily bias videos have you probably watched on YouTube? A ton. How many times have you actually understood and applied exactly what the person is telling you? Probably not a lot. And so when I say that it's important for us to understand the daily bias, I want you to understand it for yourself. So what you are going to do is you are going to be doing this exercise. You are going to be doing this exercise over and over again on different pairs, on everything, right? So what you are going to do is you are going to go on any sort of market, right? You can do this with coffee. You can do this with Nasdaq. You can do this with Forex. You can do this with Euro dollar or with Aussie Japanese yen, right? You can do it with whatever pair you want. But what you're going to do is you're going to go to the daily. And then let's even go into my case studies one. So you're going to go into the daily right here on whatever pair you want. And you are going to, let's even say, okay, what is a pair that I don't trade? I don't trade Aussie Kiwi, right? It's the craziest pair. Don't fucking trade this pair, right? Oh my God. Oh my God. Okay, whatever. Let's just do it. So then you're going to do this and you're going to go back, bar replay tool. Let's say we go back to 2019. So you can see that right now I saw no price action, right? I didn't see any price action until 2019. So now what I'm going to do is I'm going to analyze market structure. I'm going to analyze the daily bias. I'm going to analyze and see when do I have an edge in terms of executing on the market. And so what I'm going to do right now is I'm going to analyze this and be like, okay, we've swept the big low. No, we haven't swept the low, but we swept a lot of lows and we had a big reversal right there. Now we have this high was broken, so technically we are on a bullish trend. So I would expect the market to move higher. But right now, I have no idea if the market is going to move higher or if it's going to move lower because external market structure, as we've talked about, is bullish, but internal is actually bearish. So I'm going to wait until we have some clear sense of direction. So let's see. I'm not going to cut this. I'm just going to give you everything as I'm thinking about this. This video is going to have no cuts, so you understand what exactly everything that I'm looking for. So we're reaching this extreme, but we are still bearish right here, right? So if I am bullish, I'm going to wait until the market actually shifts bullish, right? So let's see, because right now still bearish, still bearish, still bearish. Like basically, is it still bearish? Well, technically, you don't know if this is the reversal, right? You don't know if this is the reversal point. But what you know is that right now we have to break through this order block before the market actually has a free run to the highs. So let's see. Okay, the market continues moving lower, right? So at this point, a lot of people would be like, yeah, the market is bullish. And then you have two red days and you're like, oh my God, but the market is supposed to be bullish. And it's like, yeah, just wait for the market to actually confirm to you that it's bullish. Right now, the best thing the market could do is actually switch bullish again here. Then I would be thinking that we could be going for the highs. Because notice how, do you guys know every time we do this drawing, it's always this, right? So now, the way you see if this section of the move is by having the next confirmation, because then you would technically be there, right? So let's see. At this point, we're not doing anything yet. Okay, still bearish, right? Still bearish. This is the new order block. So again, bullish, move towards the order block. I would expect this low to go now. So that low is gone right there. So can you see how it's not instant, but the market moves there in these waves, right? So we retested the order block, and once we printed this candle, I thought, okay, now we're moving towards the lows, and we did. So let's see. Okay, to the lows again. So right now, I would be bearish until proven otherwise, really. So right now, the next target is basically this extreme right here. And the extreme was hit, low was swept, perfect. So once again, now I am neutral. So can you see how from watching price right here, we understood, okay, technically, externally, we are bullish, but I am not entering in any longs until the order flow actually breaks bullish. A lot of people, they get burned because they start longing these things and they always lose, right? So what I'm telling you is, if you want the highest probability trades, internal and external structure need to align. That means that every time you draw this, you need to wait for this shift in order for the easy trades to come. And then you can see the market moves higher, taps the order block, confirms bearish, right? And then just moves to the low, right? So you would be better off even just being bearish until you're back to bullish. So there is a possibility of taking shorts on this move lower. Like we've seen the clear targets, but okay, so now look, sweep of the low, reversal. At this point, you would like to see a little bit of confirmation, but right now, this would be the next target. Right here, we're at this extreme, and that is it. That is the next target hit. So let's see. Okay, boom, we tap the order block, and we move higher. And by the way, one of the extreme important questions for you to ask yourself every time you are doing this exercise is, okay, we reached the target. Where did we react from? So for example, right here, we instantly mentioned this order block, right? We instantly mentioned this order block. Let's even put it in red. We mentioned this order block, right? That order block gets tapped into and we say, well, we don't know if it's bullish yet. Yes, we are reacting, but we don't know if it's bullish yet. Then we went for the lows. Then we reacted out of this order block right here, right? Then we reacted out of this order block, and that's how we reached the target. And now we have reversed, right? We have reversed, and now we're seeing a little bit of bullish order flow. At this point, I wouldn't actually bet the house on the fact that we are going to go for these highs, but you already saw that I mentioned, okay, now I think we're going for these highs, and those were hit. So you need to understand that one of the things with daily bias is you don't need to know if the market is going to go here. You don't need to know. You need to know what the market is going to do tomorrow and if you're going to trade or not based on that idea, right? So after we sweep this high, I'm not trading on this specific day, right? But if the market then confirms that it's reacting out of this order block right here, then I'm going to actually take the longs again. So that would be 1 winning day, 2 winning days already, right? So you don't need to know whether the market is going to go for the big high or not. Just trade as if it's going to go now to these highs, right? You wait, and then you wait for confirmation, right? We just tap the order block right there. Boom. And boom. There you go. Again, notice how, once again, we're just putting the next target. It's always next target. What's the next target? What's the next target? What's the next target, right? Those are the things that you ask yourself. You don't say, we're going to go for this high. You just say, okay, I think we're going to here into the next level. It's a ping pong, right? So that's what I recommend you doing. I'm not telling you to trade every single day at all. You trade when the draw on liquidity is obvious, which in this case, it was this high. And that's where we reached, right? So now, am I going to trade towards this high? Well, we just swept these highs and we reached this extreme order block right here. So I would wait a little bit, right? So now we have the Boom. And now I think that we'll be going for those highs. There you go. So notice how I'm being very specific on what trades I'm taking. Very specific, right? So with that being said, you can see that we were like, okay, I don't know if it's yet bullish. Okay, it's bearish. We're going for the low. Boom, we're going for the low. Boom, we're going for this low. We're going to this extreme. We mentioned all of that. Then, only when we see this reversal, do you start thinking, okay, now I'm going to target these highs, then these highs, then these highs, right? Can you see how I'm not trying to forecast the low of the market. I'm trying to forecast continuations on the daily. So our trades are never going to be a reversal here at the low. That's what I meant with the taking trades part 1 video, that a reversal trade is not really a reversal on the daily, it's a reversal on the daily power of 3 candle, right? It's, for example, taking a reversal down here. It's taking a reversal down here. It's taking a reversal down here, right? We're not trying to call the low on the daily chart. We're trying to call the low on one specific day. That is going to be a continuation day, right? So let's see. Now, what do we expect? We expect a little bit of a pullback possibly, but then I do expect now these highs to go. Pullback, and we should be going there now. Yeah, there you go, right? So can you see, notice how, let's do this. Bullish order block, respected. Bullish order block, respected. Bullish order block, broken through, respected. I'm not telling you to call the low or the high. Notice how we literally just went through a whole, range where we forecasted the move to the low and the move to the high. Understanding both market structures. Me still saying, I think external market structure is bearish. But I would have traded internal market structure until both align, and then boom, there you go, we're trading. Right? We're trading, and we're trading even more aggressively. So that is how you do this is called the daily bias exercise. You just check the daily, and then you look for next targets. You look for where the market is reacting from in these targets. You see how the market is moving towards these targets. You try to read market structure, right? This is the most important exercise. I have a video. It was maybe 2 years ago, I think, when I started trading smart money concepts. 2 years, maybe 3 years ago. I don't know. I don't know exactly when it was. I do think it was 2 or 3 years ago. I was in Budapest. I have this in the day in the life on this channel. And I mentioned that I was doing a market structure exercise where I wanted it always to align, right? And if you see, oh my God, I can try to get it at the end. So I'll cut it at the end and then I'll show you exactly what I'm talking about. But this is a very, very important exercise. We just saw external structure holding, but internal structure also holding. So we were never saying, oh, yeah, this is the low. No, we were like, okay, if the market reverses, then that maybe is the low, right? Okay, then we see confirmation. Okay, that is the low, right? And from here on out, we're just looking for the next target. Look, if you would have tried to forecast this to be the low, this order block to be the low, it would have taken you 39 days of being wrong and 39 days of being right. And that means a lot of losses right here and only then a lot of wins. So what if you just wait for the whole market structure to align? Because then you could be right for 47 days and then right for 39 days. Can you understand the difference? Right? Because one is just trying to call the low because you only understand the external structure. Oh no, the market overall is bullish. Yes, but that does not mean that short term we can't have these bearish pushes. So what is our next expectations? Now we're thinking about targets. So the next target is going to be this order block right here in the high. In the high, I'm not even going to put the swing high. I put this high. Let's see. we could have a little bit of a pullback, but now hit the next target, reacting a little bit, and now look, fair value gap. Let's see if it holds. Bullish fair value gap. Let's see if it holds. Still holding, was now disrespected. So we reached one of the targets, which was this whole order block. And if you want a little even more confidence for the pullback, you have this order block, right? Then let's see, we flip this back to bullish. Now we're bearish again. Let's see. So at this point, are you bullish? Well, external structure is bullish, but internal structure is showing you that bears are taking a little bit of control, right? So now you want to see an actual good reversal, and that's when you are bullish again. And not yet. Again, notice how, once again, we had the bullish reaction, right? We had a very nice bullish reaction, but it never broke through this bearish order block. So a lot of people get lost because they keep on longing, not understanding that there's still a huge bearish order block, right? So right now, the lows are still the target. Okay, now we move bullish. Let's see. Move bullish. Boom. Let's change this. Right there. So now I expect this high to go. Let's see. And there you go. Right? So can you understand how we saw, once again, external structure, internal structure, short-term bearish. Now it flips bullish. It flips this order block into a bullish order block, right? This is a bearish order block right here. It turns bullish, gets retested, and then it moves to the high, right? So this was, how long was this? So this was 17 minutes of this exercise, right? So can you see, this is one of the most powerful exercises. You can do this with any pair, any market, whatever it is. It's just going to help you understand external and internal market structure, and it's also going to help you understand the daily bias, right? Because then you can understand when to trade and when not to trade. If you only want to trade when the market is both aligned in both sides, here, sweep of the low, market shift, that's when you trade the longs. You ignore until this happens, right? So with that being said, that's really the exercise. This is one of the most powerful exercises to master daily bias, to master market structure. And I seriously recommend you doing this exercise. So with that being said, I hope you enjoyed, and I will see you in the next one. Peace. So quickly, like, this is the video. It's called Fund the Trader, Day in the Life, Improving My Edge. It was posted on 26th of March 2022. Oh my God, it was so long ago. 2022, so that means almost 3 years. Almost 3 years. And look, I was learning about market structure. So let me quickly show you what I was talking about. That,
okay, I've just spent
this is what I mean, right?
Okay.
It was me trying to figure out market structure. And I do think I mentioned exactly what I was doing.
Spent like almost 1 hour. It's basically just finishing this blocker, just drawing points on the charts. The reason for that is because I'm looking at structure to see if I can identify the way that I want to look at structure in the market too. This is probably the biggest. Like, the thing is, it seems like such a dumb problem. I feel like I'm just overcomplicating things.
I was. Hell yeah. So with that being said, that is really it. See ya. Peace.